Most of the men in my life have been to prison at least once. My grandfather did a short stint before I was born. My own father was sent to prison when I was just a child. And now, my older brother sits in prison himself. In truth, my experience is not entirely unique within my community. African American families have been ravaged by the criminal justice system. Studies show that Black Americans are 5 times more likely to be incarcerated than their white counterparts. However, incarceration rates are relatively high across the country. The United States imprisons more people, both per capita and in absolute terms, than any other nation on earth. It was this huge prison population that led to the creation of private prisons. During the 1980s, as tough-on-crime policies caused a sharp increase in the number of arrests and convictions, public prisons began to become overburdened by the new influx of prisoners. State governments struggled to keep their overcrowded correctional facilities operational as they posed huge costs to their budgets. So policymakers looked to the private sector for a solution. They hoped that privatization would allow some prisons to be run more cheaply and efficiently. These private prisons would take on the cost of managing the facility and housing the inmates. In return, they would receive a stipend from the government that would allow them to make a small profit. The size of this payment was tied to various metrics. Sometimes it was based on the size of the prison, sometimes it was a yearly set amount. In most cases, however, it was based on the number of inmates that the prison housed. For years, I lacked the language to describe the dynamic between the government and the private prison industry. I knew that the relationship seemed precarious at best, but I had trouble explaining why. Only recently did I discover the language and conceptual underpinnings that accurately speak to this relationship. Moral hazard. In economics, a moral hazard occurs when one party in a transaction takes actions that are relevant for, but not observed by, the other party. These actions are often caused by the fact that the two parties hold divergent interests. In such cases, inefficiency arises due to these misaligned incentives. A common example of moral hazard occurs in the insurance industry. Take, for example, car insurance. Almost counterintuitively, people with insurance are more likely to take more risk and drive more recklessly. This is because the insured take on less burden since they are protected, in a sense, by the insurer. By extension, however, this also means that there is a greater chance that the insurer will be forced to pay for any damages that occur as a result of this reckless behavior. An insurance contract, therefore, influences the actions of one party, and the incentives of each are often misaligned. Examples of moral hazard exist in many industries and in many forms, though not all cases of moral hazard actually deal with immorality. Some do, however. This brings me back to the private prison industry and the moral hazard it presents. The creation of a private prison can be understood to be a contract between the government and the prison itself. Though the two parties seem to possess the same interest at face value, a closer look at their underlying interest reveals the two have misaligned incentives. At bottom, the government uses public prisons to rehabilitate inmates and facilitate their introduction back into society. A perfect system would ultimately see a reduction in prisoners as recidivism rates get closer to zero. Private prisons, on the other hand, are often incentivized to increase the number of prisoners, as their profit is often tied to the total number of inmates they house. A reduction in prisoners would mean a reduction in profits. Private prisons have a financial interest in the continued growth of mass incarceration. These misaligned incentives have led the private prison industry to take unobservable actions that are meant to promote their own interest. Namely, companies that own private prisons are suspected to spend significant amounts of money lobbying policymakers to enact laws that benefit them. For instance, the two largest for-profit prison companies in the United States, GEO and the Corrections Corporation of America, or the CCA, have spent nearly $25 million on lobbying efforts aimed at passing laws that increase the length of prison sentences and reduce the threshold for arrest. The ultimate goal of these actions is increasing the number of prisoners and the length of their stay to gain more profit. In other cases, private prisons take actions that indirectly increase recidivism rates. Some of these actions include cost-saving measures like cutting staff and employing less skilled correctional officers. These actions often lead private prisons to be more violent than public prisons, and more violent prisons generally have higher levels of recidivism. These actions, whether direct or indirect, often go unnoticed by government officials and undermine the efforts of the public prison system. And yet, there is a way forward. As moral hazard issues have cropped up in other industries, the involved parties have designed ways to ensure that their respective incentives are aligned. The biggest hurdle these parties face is the information asymmetry that exists between the principal, the uninformed party, and the agent, the party who holds private information. In order to overcome this information gap, The parties need to adopt a principal-agent framework, wherein the principal designs a contract in such a way that the agent's incentives are aligned with those of the principal. Insurance companies, for example, often require deductibles so that policyholders share some of the cost. A similar approach could be taken to align the incentives of private prisons more closely with those of the government. Importantly, the government could redesign contracts so that the metrics used for payment are not tied to the number of inmates. Instead, stipends could be set yearly with additional bonuses awarded to prisons with lower recidivism rates. Though potential solutions are plentiful, questions still remain. Can moral hazard be eliminated completely? Is it possible to design a contract that perfectly aligns the interests of two parties despite information asymmetry? Or are some contracts doomed to fail? The failings of the government's contract with the private prison industry has had a devastating effect on the nation's underprivileged communities. It is an impact that I have felt personally. And as we look forward to better solutions for the moral hazard problem, we must always keep in mind what is at stake.